There's a common issue with many traders, and that's the use of too many technical indicators for trading decisions. Whether they're swing traders, day traders, or even position traders, too many indicators equals complexity, which usually equals a lack of consistency with your trading decisions. Indicators get a bad rap for lagging price, but the real problem is a trader who leans too heavily on the indicator without seeing the picture the actual chart is telling them. Now, I've used trading tools in different combinations over the years, and there are three that I have found to be the most useful indicators for how I like to trade. Almost every charting platform comes with a host of indicators that those who engage in technical analysis may find useful. You just apply any of them to your chart, and a mathematical calculation takes place taking into the past price, current price, and depending on the market, volume. The information that's presented to you via the indicator can be broken down into trend direction, momentum in the market or the lack of momentum, volatility for your profit potential, and volume, which measures just to see how popular the market is. Now, you certainly would not want to use indicators that give redundant information, such as several trend determining indicators, because you're just adding clutter when you may be better with a minimalist approach to trading. Too much information can cause analysis paralysis, which can keep you from making trading choices that are actually profitable ones. Now, ensure that whatever you use for your trading analysis actually helps and not hinders your decision-making process. Intraday trading, for example, would not be served by having too much information to process, because by the time you've decided on a trade, the opportunity may have passed, and getting in late usually increases your risk and lessens your reward. In my experience, there's no best when it comes to indicators, because it all depends on how you personally interpret it and utilize the information that's presented to you. The NetPicks Trend Jumper uses a few standard indicators, nothing elaborate, but it's a trade plan that uses the information given to you that makes a difference. And I'm going to give you a link to download the free version of Trend Jumper at the end of this video. Now, if you're a day trader looking for trends, you may want to apply one or several moving averages to your chart. Depending how you process the information will determine what the trend is for you. Some will use one average, and if price is active above it, the trend's up. Others will require a cross of two or more moving averages to show them objectively which direction to trade. A more elaborate style of trading is going against the flow, which would mean shorting a market that's moving up but it's currently overbought. A trading oscillator such as stochastic may be used to show when price is in an oversold or overbought situation. Remember though, a market can stay in one of those states a lot longer than you can remain solvent. Each trader will determine when it's time to take action when the market's in either one of those positions. You may find indicators work well for one market, yet find something better for another market. Forex traders, for example, won't have much use for volume-related indicators if trading a retail account. Many trading systems and methods use indicators, and you should understand exactly how that information is not only computed, but how that information is used for trading decisions. Black box trading system that simply presents buy and sell arrows, it's meaningless if you don't understand why there's a trading opportunity. Now, people ask if indicators work, and I say, well, it all depends on how they're put together in the context of a trading plan. Some of the most used technical indicators, such as moving averages, the MACD, and CCI, work in the sense that they do their job in calculating the information. How you take action with that information is where the power of the indicators come into play. Don't be sold on the holy grail indicator that marketers flood your inbox with. Proper usage of basic indicators against a well-tested trade plan through back testing and forward testing through demo trading is a solid route to take. Now, there's a downside when searching for trading indicators that work for your style of trading and your plan. Many systems that are sold use standard indicators that have been fine-tuned to give the best results on past data. They package it up and they sell it without taking into account changes in market behavior. There's nothing wrong with optimizing to take into account current market realities, but your approach and your mindset in doing so can either have you being realistic or over-optimizing out of the realm of reality. Now, in the next video, I'm going to show you my favorite indicators and how I put them together to determine if and when there's a trading opportunity.